So somebody asked me, how do you set your take profit on your trades? How do you set your take profits on trades? Generally, there are three ways that you can use to set or place or determine your take profit. And it's important because your take profit determines where you are going to get out of the market at a profit, because you are not just going to place a trade and hope and pray that it's going to go forever and ever in a profit. So at some point, you are going to need to get out. And I usually say that it's important that before you actually place a trade, you actually have an idea of where you are going to get out of the market when you are making money, and when you are going to get out of the market when you are losing money. Very important. Know your take profit, know your stop loss. So there are generally three ways of setting a take profit. I know of traders who use percentages when they set their take profit. So it's another approach that you might want to look into. Let's say you place a trade, for argument's sake. Let's say for argument's sake you bought here sniper entry. For some traders, they actually calculate a percentage, or they determine it by how much money they actually make on that trade. So, for example, they might aim for a 10 to 20% profit on their trade, and then they get out of the market. Some they aim for 100% profit, then they get out of the market. Some they aim for 200% profit. So they are basically looking to what? To double or triple whatever they would have bet in the market. So that's another way of determining what? Your stop loss. So you can do that according to percentage. How much percentage are you hoping to gain for the trade that you placed in the market? That's the first way of determining take profit. The second approach is, I know people use Fibonacci retracements. I don't use Fibonacci retracements myself, so please bear with me. I'm just trying to give you an example here. You can see our Fibonacci there. I've just placed a random Fibonacci thing there, because, like I said, I don't use Fibonacci myself. So don't bash me in the comment section again. So some people use Fibonacci, and they use these Fibonacci levels to determine when to get out of the market. They are looking for retracements and bounces from these Fib levels. That's where they actually determine that it's actually time to what? To get out of the market. It's good to get out of the market when you're still making money. By the way, if you are new on this channel, before I talk about my approach, if you are new on this channel, please consider subscribing so that you do not miss future videos. Like this video, if you're going to learn one or two things, if I've entertained you, just like the video. Leave your questions. I like reading your questions and trying to answer your questions with my videos, so that we actually help each other. If you are looking to download stuff, Forex robots, indicators, books, and stuff like that, there are actually links in the description box below. Visit those links and see if you cannot find what you are looking for. Many people also ask me about the broker that I use. See their link in the description box below. One of the best brokers in Africa and in the world. I have not had any problems with them, with their platform, deposits, withdrawals, with using robots and stuff. And you can actually trade crypto with them. See the link in the description box below. So I was saying, so some people who trade with Fibonacci, then they use fibs to determine the points according to the fibs, where the levels where they are going to actually get out of the market. That's another approach. My approach is actually zone to zone, because I trade what? Zone to zone. That's how I trade. That's why you see my zones are there. The blue ones, obviously, that support, or and the red ones are actually the resistance, whatever you want to call it. But basically, I trade zone to zone. So what it means is, let's say if I place a trade here or around this area, I rarely place trades like in the zone there, because I'm not looking for sniper entries. I'm looking for profitable entries. Sniper entries are risky, so I'm not trying to be a show off and try to catch these trades when they are here. I'm waiting for at least some movement out of the zone, so that I know that definitely we are going out of the this way, or we are going that way. So I actually then set my TP at what? At the next zone. That's how I actually do it. So you can actually decide what works best for you, whether you want to use percentages. If you say, for argument's sake, your entry, you place maybe $10, $100, $20, and you say, I want to get out if I increase that money by 50%, by 100%, by 200%, 300%, whatever you believe best suits you. So that's the first approach, by percentage profit. Most people, they aim for what's called one-to-one risk reward, or 1 to 2, 1 to 3. So basically, you are aiming for 100%, 200%, 300%. So that's one way of determining that take profit. Then the second approach, we said, it's a popular approach as well, with people who trade with fibs. Forget about my playing with the fib there. I don't use fibs, so I don't know how people actually use them. I'm not saying people don't make money with fibs, they do. I just failed to make money with them, so I gave up using fibs. So, yeah, that's just me. So, people then determine their take profit uh, looking at the fib levels. Then the last one is, like I showed you, we have people who actually, like myself, who trade zone to zone. So you can basically have your entry there, and you then obviously your take profit will be at the next zone. If you learned one or two things in this video, just go ahead and like the video. Again, subscribe if you're not yet subscribed. Until next time, bye.